Alright, so here's the deal. Everyone's getting ready to coast through the holidays. But if you play these next few weeks smart, you can set yourself up for an absolute monster year financially. I'm talking about making 2026 your best money year yet. If you're just finding this channel, what's up? I'm your Wealth Wingman, and I'm here to help you level up your finances and build real wealth. And every December, I do this thing I call a complete financial reset. Today, I'm walking you through the exact process so you can do it too. First up, your personal money wrapped. This is something I do religiously every December, and honestly, it completely transformed how I think about my finances and plan ahead. So you know how Spotify gives you that wrapped feature at the end of the year. We're doing that exact same thing, but with your cash. Think about it like this. Spotify breaks down your listening into hard numbers, the hours you spent, the patterns you didn't even realize existed. What if you did that with every dollar you spent this year? Now look, I'm not gonna lie, this exercise isn't exactly a party.
So make it better for yourself. Grab your favorite coffee, maybe some hot chocolate, find a cozy spot and pull up your bank statements or whatever budgeting app you're using. You're trying to answer 3 critical questions. First, what was my total income this year after taxes? Second, what did I actually spend? And third, did I end up with extra money or did I go into the red? That last one is your surplus or deficit. Surplus means you spent less than you made, so you had cash left over. Let me break this down with a real example. Say your take-home pay was $2,900 monthly, plus maybe some rental income, plus whatever extra you made from side gigs like dog walking or freelancing. Add all that up for the full year. That's your total income number. Then you break down everything you spent. Start with the fixed stuff, rent or mortgage, groceries, car payments, all the essentials that keep your life running. Then hit the fun categories. Shopping, eating out, subscriptions, entertainment, all that good stuff. Now here's where I do something a bit different that most people don't think about. Usually, people list their savings and investments completely separate from spending, right? And normally I do that too, especially when I'm tracking monthly budgets. But for this yearly money-wrapped exercise, actually put my savings and investments as a spending category right alongside everything else I paid for. Because if I count savings and investments as spending, then when I calculate my surplus at the end, I'm looking at money that's genuinely left over. Cash I didn't spend and didn't already save or invest. So, if I've got a $500 surplus, that's not money I already put away somewhere. That's $500 just sitting there that could have been working for me. That tells me I could bump up my monthly savings by maybe $200 next year without even feeling it. But if I kept savings separate and just saw that $500 surplus, I wouldn't know if that was actually extra money or if I was just congratulating myself for cash I'd already stashed away. That's why I lump it together first, then figure out the real surplus at the end. Because that number shows your untapped potential. Once you run this for all 12 months, you'll see the full picture laid out, and patterns start jumping out at you. Maybe you blew way more cash in winter. Maybe it was too much time stuck indoors, leading to emotional spending. Or maybe summer hit different. Weddings, vacations, festivals, all stacked up, and you actually went negative. These aren't random. When you look at your numbers like this, you start spotting these patterns. And the more you can connect those spending patterns to your emotions and habits, the more control you have over your financial decisions going forward. This whole exercise is about financial awareness, understanding where every dollar went month by month, and whether you finished the year ahead or behind. By the way, this specific tracker I use, it's part of my complete financial wellness toolkit. Comes with a full dashboard and a workbook. I'll drop the link below if you want to check it out. Moving on to your yearly audit. According to research from Deloitte, the average American household is paying for 4 streaming services, totaling around $69 monthly. That's over $800 a year just on movies and shows. Now, that might not sound crazy at first, especially if you're constantly watching stuff. But here's the real question. How many of those services are you actually using? I'm willing to bet that if you're watching this right now, you've got at least one subscription you completely forgot about. It could be an app you downloaded months ago, a gym membership you haven't touched, a streaming service you only got to watch one specific show. These things just quietly drain your account every month, and over a full year, it seriously adds up. So this is your wake-up call. Go through every single recurring payment, subscriptions, memberships, streaming platforms, software tools, apps, everything. Cancel or pause anything you're not actively using right now. Look, there's nothing wrong with paying for stuff that genuinely brings you joy or makes your life easier, but you actually need to be using it. Once you've cleaned that up, move on to your bigger bills. Stuff like your phone plan, internet, insurance. This is where the real savings live. And nowadays, it takes less than 10 minutes to see if you're getting ripped off. Car insurance is probably the biggest culprit here. They literally bet on you not switching, so they slowly jack up your rates every year until you're paying way more than you should. Just follow the one-year rule. Every year, shop around and compare offers to make sure you're not overpaying. Easiest way to do this is hitting up a comparison website. I've got one I recommend in the description. Now let's talk about rebuilding your financial foundation. Now that you've cut the waste, it's time to lock in the foundations that everything else gets built on. Start with your emergency fund. Do you have enough saved to cover 3 to 6 months of expenses? If you had that cushion at the start of the year, did you dip into it? Is it still at the same level? You might have built a solid rainy day fund years ago, but if your income or expenses have gone up since then, your savings might not stretch as far today. If your rent went up, if you're leasing a car now, if you've got a dog or kids you didn't have before, your emergency fund probably needs a boost. Once that's handled, take a look at how much you're sitting on in cash versus how much you've got working for you in investments. You don't want to be sitting on a massive pile of cash beyond your emergency fund because inflation will quietly eat away at its value. On the flip side, if you've got every penny tied up in the market, the last thing you want is having to sell stocks, possibly at a loss, during a financial emergency. There's no perfect formula for cash versus investments, but here's a good rule of thumb. Anything you've got in cash above your emergency fund, and it's money you won't need for the next 5 years, you should really think about investing it. You'll make way more through investing than you would just parking it in even a high-yield savings account. A few small tweaks now before the year ends can set habits for the future that'll add up to thousands over time. This is all about grabbing your free money and not leaving it on the table. Before the year wraps up, there's literally free money sitting there with your name on it. I'm not talking about future gains or potential returns. I mean actual money that's already yours to claim. And most people leave thousands on the table every year. Let me walk you through the big ones. First, max out your employer benefits if you haven't already. Millions of people are opting out of workplace retirement plans their employer offers, which literally means they're turning down free money. If your employer offers a $401,000 match or something similar, just contribute enough to get that full match. It's literally free cash and a 100% instant return on what you put in. Before the year ends, just double-check you're enrolled and contributing at least enough to capture that full match. Next, use your tax allowances before they reset. Most countries give you tax-free allowances each year, and those don't roll over. You use it that year or you lose it. In the US, for personal taxes, it's the calendar year, January 1st to December 31st. Mark that date and make sure you've maxed out whatever allowances apply to you. If you invest in taxable accounts, you also want to consider tax loss harvesting. This is when you sell underperforming investments to offset capital gains elsewhere. It's not about gaming the system. It's just being smart with what the tax code allows. If you've got investments sitting at a loss and you think they'll recover, selling them before year-end could cut your tax bill. If you donate to charity, you might as well make it count. In the U.S., charitable donations to eligible organizations can reduce your taxable income. Just make sure you're keeping records and donating to qualified nonprofits. Finally, know when your fiscal year runs where you live, and make sure you're using up those tax advantages before that year closes out. A lot of these allowances reset at year-end, so don't miss out on tax breaks just because you forgot the deadline. This next part is crucial for making real progress. Set crystal clear financial goals for the next 12 months. Once you've got the basics locked in and you've looked back at what happened this year, it's time to look ahead. Think about what you actually want your money to do for you next year. Not vague stuff like, I want to be better with money, or I want to save more. Something specific that would genuinely move the needle and that you can track month by month. Maybe it's saving for a house down payment, paying off a credit card, building your emergency fund, or setting up your first investment account. Whatever it is, pick one or two goals that matter most and write them down. Put actual numbers next to them. If you want to save $6,000 by December 2026, say I want to save $6,000 by December 2026. That's $500 a month. If that feels like too much, either cut the number in half or stretch the timeline. The point isn't perfection. It's giving your money direction and giving yourself something concrete to aim for. Here's how to actually do this right. First, look at your projected income, your monthly salary for the next 12 months, any side income you're expecting. Then put in how much you plan to save and invest each month. This should be way easier now because you've already done the last 12 months, so you've got a baseline to build from. Then fill in your other spending categories. The goal is to give every single dollar for the next 12 months a job. And you want to do this in advance, because if you don't have a plan ahead of time, you'll just be winging it. Here's the key part. If your goals shift halfway through the year, just adjust these numbers. Maybe you get a raise. Maybe an unexpected expense pops up. Just update your tracker, and you'll instantly see how it affects your end goal. This whole thing takes maybe 20 minutes to set up, but once it's done, it's such a relief. You've got a clear financial roadmap for the entire year ahead. It doesn't mean you're locked in. It just means you're not guessing or hoping. You actually know where you're headed. When your goals are that clear, every other money decision gets way easier. Another way to crush your goals faster is learning how to solve problems more effectively. And that's exactly what today's sponsor, Brilliant, helps you do. Brilliant is an interactive learning platform that helps you finish every day smarter than you started. You can master topics like math, science, computer science, and it does it in a super simple way. I've been going through their everyday math course just to keep my brain sharp. It takes real-world math like percentages and makes it easy to connect those concepts to actual scenarios in daily life. One thing I love most is there's no sitting through long, boring lectures or forcing yourself through textbooks. Instead, you learn by completing small, guided challenges. It feels really personalized too, because you start at the right level for you and move forward at your own pace. Best part? It's built by teachers and researchers from MIT, Harvard, and Caltech. So you're learning from some of the best minds in the world, but in a way that feels practical. You can try Brilliant completely free. Go to brilliant.org/NISHA or scan the QR code on screen or hit the link in the description. You can access all the content for free, and if you want to keep going, Brilliant is giving our viewers 20% off an annual premium subscription. Now, let's talk about creating your money operating system. This is where everything you've done so far comes together. If you've reflected on your spending, made adjustments, built your safety net, set your goals for next year. Now it's time to make all of that stick and actually execute. You do this by creating a simple system that keeps your finances running in the background without relying on willpower. Because goals are great, but let's be real, life gets hectic. If your plan depends on remembering to move money around every month, it's probably not going to happen consistently. So before January hits, Build your money operating system. Think of it like automating good decisions so they happen even when you're tired, distracted, or busy doing literally anything else. Start with automation. Set up automatic transfers to your savings, your investments, your retirement accounts. Schedule bill payments for the same day each month, ideally right after payday. That one small shift, paying yourself first and spending what's left, will do more for your long-term wealth than any budgeting app ever could. You can also automate contributions to sinking funds. These are smaller savings buckets for predictable but irregular expenses, stuff like car maintenance, vacations, birthdays, annual insurance payments. By setting a bit aside each month, you avoid those stressful moments when a big bill drops. Next, remove as much friction as possible. James Clear, the guy who wrote Atomic Habits, talks about this. He says his wife keeps a box of greeting cards pre-sorted by occasion. Birthdays, sympathy, weddings, all of it. Whenever she needs one, she just grabs the right card and sends it off. She's amazing at remembering because she's reduced the friction of doing it. That's the exact mindset you want with your money. Set up your environment so making good financial decisions is easier than making bad ones. For example, keep your emergency fund in a completely separate bank so you're not tempted to touch it. Link your investment account directly to your main bank so transferring money takes seconds. Unsubscribe from retail emails that tempt you to spend on impulse. Keep your savings app on your home screen so checking progress is as easy as opening Instagram. The less friction your system has, the more likely you are to stick with it. Finally, create a simple money dashboard. This is just a quick way to see everything at a glance. Doesn't need to be complicated. Could be a Notion template, a basic spreadsheet, even a page in your Notes app. Just make it easy to track your finances and see everything in one place. When you can see progress, even tiny progress, it builds momentum. And momentum is what keeps your system alive, even after the initial excitement fades. Your money operating system doesn't need to be perfect from day one. Just start with 1 or 2 automations right after watching this video. See how they feel over the next week, and if they're working, add more over time. The end goal isn't thinking about money constantly. It's setting things up once so your money quietly does its job while you get on with living your life. Money should add to a good life, not take away from it. So before you pop the champagne and celebrate the new year, just take this afternoon to run through these 6 steps we talked about. Taking a couple hours now can go a long way toward helping you start 2026 feeling calm, organized, and totally in control of your finances. If you found this video helpful, share it with someone who wants to start next year on the right foot. And if you want to keep the momentum going, check out this video right here where I break down the 5-minute habits I use to save over 25 hours every week. Hope you have an incredible end to the year, and I'll catch you in the next one.